and something you can do regardless of how the market is going to go to find stocks that could make an interesting jump in the week ahead. So first off, let me share my screen here and let's see, there we go. Just look at these charts that are the futures for the NASDAQ and for the price of oil, crude oil. And we see that the market has just opened, and what's it doing? It's heading up. Well, I got a couple of bearish positions on, so I'm bummed that they're not winning right now. But this is actually very good news for people who are hoping that the market will be bullish and will continue going up. Because look at what has happened over the weekend. The NASDAQ futures gapped down a bit and then dropped just, as the futures started trading on Sunday. And then they sort of bottomed out, and here just in the past couple of hours, they've been on their way up. And then right out of the gate, they started up again. Now, see right here, as it got to the level, this is important price action to watch over weekends. Is like if whatever asset you're looking at is true for Forex or stocks or whatever, if it moves away from where it left on Friday's close, and goes up and then comes back down, or goes down and comes back up, either way, once it gets back to that old price, how it behaves at that old price is very much of a tell for what's likely to continue. And so right here, a few minutes, about 30 minutes ago, it hits the old price on the NASDAQ futures and it just pushes right through it. So right now, the default belief for people coming into the markets is, hey, buyers, we're going up. We want to have more buyers, right? Meanwhile, with oil, this is where we left off, and we haven't made it back to oil yet. See, now this would be a lot more convincing that it was going to continue going higher if, in fact, oil made it to its old price and fell through. Hasn't done that. So there are people that are still very nervous, and buyers, not all buyers, are convinced, hey, we want to push it in and buy up stocks at this price. So that makes it really important to look for the very best possible conditions. Either it's just sit on the sidelines now until the NASDAQ or the S&P 500 start making strong upward trends and oil starts coming down, or you get very, very careful and very clever about the stuff that you go to buy. Let me help you with the latter. How can you make clever choices? I want to show you something, a chart of a stock that took place on Thursday. It had earnings on Thursday, and the earnings were such good news that the stock jumped 20%. This on Thursday. If you recall, on Thursday, the markets started going down, and yet this stock goes up very strongly. Since then, it's inched its way up as well. This is the name of the stock is GoGo, which is GoGo in flight. If you've ever taken a long flight and felt like you needed to have internet connection, and so you pay the $10 or $15 or $20 or whatever it is to be able to have internet on the plane while you're flying, this is the company that makes that possible. They do a few other things, but nobody even cares what else they do. That is what they do. And their earnings were really good. There's only one way to interpret that. People are flying again. If people are flying again, it also means that they are working their way through, all the economic question marks that have been happening up until this point. Perhaps this is also corroborated by Friday's jobs report in the U.S. So in the U.S., they had the Bureau of Labor and Statistics reported 678,000 new jobs have been created, and economists were only expecting about 400,000. So it was, a big beat. They also mentioned that unemployment in the U.S. has dropped to 3.8%, getting closer and closer to that 3.5% level, which was pre-pandemic. So a lot of people are have jobs. In fact, there's still a labor shortage. The report said that there are 1.7 job openings for every person that is unemployed right now. So it's like, you want to work, you can get work. Now, of course, do you want to do that job? Do you want to work for that pay? Well, that's why the discrepancy, right? There's a little bit of the bid and ask in the labor market right now. So really interesting that economically things are moving up. And in fact, this company is showing. I mean, hey, I didn't contribute to GoGo in flight because I have in the past, but I didn't this past week. The last Monday when I was doing this show, I was not on camera because I was in a location where, well, all you could see behind me was inside of an ugly looking room. But I was actually in Florida, having just visited a few days previously at Disney World with my wife. We went and had a wonderful vacation there, and we really lucked out. We made those plans about a month or two in advance, and the week before we got there, the mask restrictions came off. So we were able to walk around everywhere in Disney World that we went with no masks. And there were a lot of people there. It wasn't as crazy crowded as it gets, during busy time. It was, still the light time of year, but it wasn't light. There were a lot of people there. There were enough people there to make 2-hour waits on some of the most interesting attractions. I don't wait anywhere for 2 hours. I'm a short-term trader and a don't like to wait in lines guy. So we found other ways to enjoy ourselves without having to wait in 2-hour lines. But the main point that I noticed was there were a lot of people there at all the parks and at the Universal Studios and just a lot of people out there traveling and spending money. Things are rocking and rolling in the economy. So there are companies that are going to have big jumps. Our task is to find out who they are, right? Well, there's something else about GoGo that was really important. I mean, this big 20% jump in one day on the day of earnings is really interesting. But notice that it was starting to go up a little bit in front of earnings, kind of going up strongly. You could look at that and say, hey, some people knew some stuff, right? Insiders trading. Probably not insiders, but definitely hedge funds or, institutional traders of some kind. And they may not have known for sure that it was going to be good, but they might have known, hey, there's risk and we've got to be careful. Now you say, risk, what are we talking about? Why would it be risky if they were about to have good news? It would be risky if they were short, right? So let me bring up FinViz here and I'll show you what I'm talking about. FinViz has the ability to search on something called short float and short ratio. And so if I go to the screener here, I go to all, there's an item here that has float short. And what that is this is what percentage of the trades that are outstanding are actually listed as having been initiated as short sell orders. So these are people that want to profit from the stock going down. And if in fact the stock goes up, they're losing money. They're literally upside down compared to buying a stock. It's opposite world for them, right? So if they are sitting on a position and earnings are coming up and there's a possibility the earnings might be good, they've got trouble. They've got to get out of there. They got to get out of there because, like, if what happens with GoGo, a 20% jump, that's going to be a 20% loss for them. And so if you can find stocks where where a high percentage, 20% or more of the trades that are out there are short, that's something that's really important for looking. And have earnings coming up. That's something that's really important. And that's the kind of clever stock opportunity that we're looking for. So to do that, all you have to do is go to FinViz and select float short over 20%. We want to make sure that it's, a liquid company. So you're going to say average volume over 500,000. Okay, excuse me. And and then over here, FinViz has this really nice things about the earnings date. If you select next 5 days, cool, right? I'm going to first start this off though by selecting this month. So anything that has earnings this month, it's calendar month of March. So, whoops, not under. I need over 500K. Now, the reason I want to do this is I'm hoping, yeah, sure enough, here it is, GoGo, right? So GoGo was on this list last week, and I want to show you what it looks like. If I go to here and I specify ownership on this little tab, it gives me a different set of data, same stocks, but just it shows different data. And so here we're looking for this stuff right here, float short and short ratio. Okay, so on GoGo, it was 22. Right now, it's still 22, 23%. Now that short date always has a lag. At a minimum, it is a week behind, and can be as much as a month behind. So this is showing 23%. That's likely what it was before earnings. Since then, it's probably come down. But look at this crazy number, this short ratio, 26. Now, a short ratio it's the math of how much volume is being traded and the size of the total number of short positions. But here's a way to think about it. This number is the number of days it would take for all of the short positions to get out of their position if they didn't trade at extra crazy high numbers of volume. If they just traded regular volume, how many days would it take for the shorts to be eliminated? And the answer in this case is 26. 26 days worth of normal volume trading, which means that if in fact everybody wants to get out of their short positions, they're going to have to do it on much higher than normal volume. Well, that is what occurred here on GoGo. Let me go ahead and just show the volume numbers and you'll see it for yourself. See, here's the average volume stuff down here. And this was about 5 times the average volume. People just piling out of their shorts and piling into longs. And that's what caused that thing to jump as much as it did. I mean, these are really good earnings. Don't get me wrong. They were estimated to only make 9 cents a share, and they made $1.60 a share. But while that sounds huge and dramatic, look at the sales. The sales were expected to make just under 90 million in sales, and they came in at 92 million in sales. I mean, that's impressive enough, but it's only 3% difference. So in other words, they brought in 3% more in sales than they expected to, but out of that they made a ton of profit because I don't know, their business model or reduced expenses or one-time charge last time, I don't know what it was. But the point is that they're managing their business well, and their business only incrementally improved, and yet they made a lot of money from that. So there really isn't a 19% jump warranted in there. I believe that what happened is a bunch of shorts. Some of them were starting to get out already right here, right? But then when that news came out, they were spooked. They're like, get me out at any price because, hey, that thing could go much higher. And they're not done. There are still a lot of shorts in there, and they're going to have to figure out, do we stay? Do we hope it comes back down, or do we just quietly sneak out? As they sneak out, they have to issue buy orders in order to get out of their short positions. So that just adds to the buyers that are in the stock and pushes the price up further. Sorry. Couldn't get the mute button fast enough on that one. All right. So what about the others? If that's possible? I mean, obviously it's not going to happen for every stock that does this. But if you were to play 10 stocks with the same characteristics, there's a good bet that 1, 2, maybe even 3 of them are going to have some sort of similar reaction. That is this big jump up, assuming they have good news. Not all of them are going to have good news, but that's why I told the whole, Disney World story and my, recognition and the job stuff. We're in an upswing in the U.S. economy, despite all the bad news and all the things there are to worry about in the markets and governments, et cetera, et cetera. The truth is the economy is on the upswing. So there are companies out there that are going to benefit from it. And who are they? And can we catch short sellers on the wrong side and manage to get some bit of a jump like that? Well, all right. If I were to change this back to next 5 days, I'm just looking for stocks that are going to report earnings in the next 5 days. What do I come up with? One of them I come up with is this thing here, Woof. So let's look at Woof. This thing is going to report earnings tomorrow. I don't know if it's before or after the open, but have a look at what's happened here. First, I'm sorry. Let me go back to the screener. Check out Woof and see what is the float is 80 million. 22% of it is short. All right. That means that, hey, you take 80 million shares float. You like that if this number is under 50, because then that translates into quicker moves. But nonetheless, we got 22% of 80. That's going to be about 16, 17 million shares float that are short. So there are about 16 or 17 million shares of Woof that are in a short position right now. And this stock trades on average 1.7 million shares a day. So if in fact some news comes out where Woof has a good earnings announcement, right? Then could it jump up? Could it have that big move? Check out that short ratio. The short ratio is almost 10. And you want to see the ideal situation, the ideal stock for this would be over 20% here. The short ratio would be over 10 and the float would be under 50. So Woof isn't perfectly ideal, but it's pretty close. And so it's sitting at $18 right now. Here's what's also important. As I mentioned to you, those short ratio numbers, they're often behind by at least a week. So if you see a lot of up movement in the stock that you're looking at for these things, that it's already moved up, well, the short squeeze has probably already happened. In this case, however, it hasn't. See, this thing, it came down strong and then jumped up. And since then, it's just sort of crept up mildly. My guess is there are a lot of short sellers in there still trapped in that. Now, what about the possibility that the news is going to be good? All right, so the estimate is that there's going to be, boy, there's going to be 25 cents a share for earnings and $1.48 billion in revenue. What is this stock, by the way? It's Petco. Petco is a pet store that is rivals with PetSmart. PetSmart is part of the Walmart group of companies, but I think Petco is the biggest of the pet store companies. All right, I'll explain why pets are important here in a minute, but look at this. See, the last time they had earnings, they were estimated to be making 18 cents a share, and they were estimated to be have sales of 1.37. They came in ahead of those earnings at 1.4, and they came ahead of their sales at 1.4, 5% above, and the earnings, they came in at 2 cents above. So they beat both estimates last time, and look what happened to the stock. It just crashed. Why? Not exactly sure why. Maybe because at this particular time, people were really worried about the Omicron virus. People were backing off of their buying for Christmas retail. I don't know. People don't want to buy pets coming up into Christmas. Actually, if you puppies are pretty prevalent around Christmas to buy, but kittens are not. They're just that the way the you know uh, birthing cycle and gestation period for cats is that getting a kitten right before Christmas is really, there aren't very many of them. Not good choices. Puppies, the way things work out, there's more of those. But generally speaking, trying to buy a pet right in front of Christmas is a bad idea. And you know, so I don't know if that's what people were thinking, but it's stunning how even after good news, crash, this thing came down quite a bit and has continued to come down since then. All right, let's compare to this company, PETQ, which is also a pet store and also had this sort of downtrend, but not quite as strong a downtrend. And look at what their stock did over the past few days. Big jumps higher, this big drop as they missed on earnings. They were estimated to be making a little bit, but they actually reported that they lost just barely, right? Broke even. They had this accounting charge, which made it look much worse than it was. But their sales were up 13% more than expected. And shortly after the day of earnings, this is what has happened since. Big move, 20 to 23. We're talking about a 15% jump here post earnings. This is a pet store company, right? So if the industry in general is going to do better than analysts expect, there is the possibility. I mean, who knows? Maybe this company is poorly managed. Maybe their accounting is funky. Could be anything, right? But there's also the possibility that, like the other pet store company, they had a better quarter than anybody expects, and a lot of people got short. That's why their short float is so high, because all of this stuff. A lot of people got short. It might be time for those people to get out. If they realize that because the earnings come out with good news, boom. Oh, yeah. By the way, estimate was 25 cents and 1.48. So weirdly enough, even though the stock has dropped by 25%, analysts think that this company's sales are on the uptick. And as far as earnings, 25 cents is what they're suggesting, not 20, 25. So analysts are already telling you this company they didn't do so poorly back here, and they're doing better now than they did. Then what the heck is this 25% drop in the stock price all about? To me, it would seem that that's an opportunity for that thing to close that gap, come all the way back up to where it was. All in the first day? Probably not, unless the earnings were stellar. The point I'm trying to make here is this company, investors of this company have a lot of reason to be optimistic. And there's a good chance that with just a little bit better than expected news, these shorts are all going to have to pile out really fast. And this could be a good stock to consider. Woof. So that is one that's not necessarily just like GoGo, but that's what we're looking for, is stuff that has this. All right. We're now more than 20 minutes in to the market open. And sure enough, there's the NASDAQ having dropped, as we mentioned, because oil didn't make it to its old price. But look at what has happened with oil here just in the past few minutes. It started going up. If it was doing this, we would have expected to keep going up. It's starting to head back down, right? So keep an eye on this. We might find that the NASDAQ is actually going to try to rebound a little bit more later today. If, of course, you're in Singapore and you're trying to say, well, Gordon, just tell me what to do before I go to bed. And then let's spend just a few more minutes trying to find the latest search on short candidates or short squeeze candidates. All right, so we run that search again. Now, because the market is 20 minutes open, this reflects today's data, not last week's data. And WOOF is still on the list, as it should be. But how about these other ones, right? So let's look through here. We're going to look at stuff that's above $5 in price. We don't want to be looking at penny stocks here. So everything starting here, that it's all above 20 because that's what we searched on. And what is the short ratio? Well, that one, TDUP, is a short ratio at 9.24. There's WOOF that we looked at, which is the highest of these ones. And BLNK, is that Blink Charging Company? Yeah, it is. That one might really be worth looking at. So Blink and ThredUp. All right, let's go have a look at those charts. So what we're looking for in these charts is evidence that the short squeeze has already taken place. And therefore, we're not going to see this. In fact, we've already got the earnings out on this one. I thought I was searching on stuff in the next 5 days. Weird that that's on this list. Okay. But so the earnings have already hit on this one, and they didn't go anywhere. They've kind of come back down. Has the short squeeze already taken place? Maybe, because there was this move in front of earnings, and then there was that just a day or so before earnings. But there's a good chance that it isn't fully out. So we're not looking for an earnings jump on that one, but maybe a trend change. So that could be of interest. The other one, ThredUp, let's see, TDUP. Let's see how that one. Oh, whoops! I didn't get it typed right. Okay, the short squeeze has definitely not happened on this stock, right? And we've also got earnings coming out probably after the market today. They're estimated to lose 16 cents a share. Last time they were estimated to lose 15 cents a share. All right. So things are getting bad and going from bad to worse with this company. It's a little bit more risky, but actually, here's a big opportunity. Because if anything, the short and short float numbers and so forth, they're probably even worse. That is, higher than they are in this. Right here on this thing, we're seeing the float short is 20% and the short ratio is 9.24. Both of these numbers are probably higher in reality right now because they've been increasing over the past few days. Certainly haven't been decreasing with the stock trending that way. The estimate is that the company is going to lose more, even though, check that out, see the estimate, 69, almost 70 million, whereas they were reported to have made 63 million in sales last time. So even though analysts think this company is going to increase its sales, they think they're going to lose more money. That is a sign of a very bad business case. And as a result, we've gone from $20 to $7.50 just in the last quarter. Ouch. 60% drop in price. All right. Now, and even more if you go further back, right? So stocks like this are usually the kind of thing that I would just say, stay away from. It's a bad deal. All right. But here's the thing. Everybody knows this is bad, right? So if you were to buy this stock right now and the news comes out and it's bad, what's it going to do? Is it going to collapse super far? No. Why? Because they were already planning on it being bad. So when the bad news comes out, yeah, it might drop a little bit more. It might drop from 7 to 6. But if the news came out good, if for some reason they didn't lose 16 cents a share, let's suppose they only lost 12 cents a share, right? And the sales did increase, not to 69, but maybe 72, 75, something a little bit higher. If in fact all of that were true, then this thing could jump a lot. It could go from 750 to 10 or more. And so it's like you got this much possibility on the downside if the news is bad, but this much possibility on the upside if the news is good. All right. So this is something I think that I like WOOF a lot better, but this would be a sleeper thing. Now, if you knew anything about this company, and you somehow had a belief that it could go up, great, you'd be all over this trade. I have no intention of trying to make this trade because I don't know enough about the background and whether or not it's an internet company. So yeah, just Amazon's not doing well, and it's the internet company, really. E Taylor, right? So anyway, I think I think there's a good setup here, but it's really risky. So if you did it, it would just be like casino money. Whatever you'd spend, you expect to lose it, but hey, maybe hit the jackpot, right? That kind of thing. So it's an interesting trade, but it wouldn't be the one that I would favor a lot. So looking down the list, Blink Charging, that one's already gone from earnings. Dick's Sporting Goods, see how that it made this dip and it's run up strongly since then. I feel like that is evidence that the short squeeze already got underway. The good news about a thing like that is there are people that are worried that Dick's is going to have a good quarter. They made 319 last quarter, and analysts are expecting them to make 347 in earnings. They made 2.7 billion, and analysts expect them to make 3.3 billion. Yeah. So analysts really think that they're going to turn in a good quarter. On these numbers, the price was clear up here at 141. Now the price is down to 110. This is people trying to get out of their short positions. 1, 2, 3, 4 days. And we have a short ratio on Dick's of only 6.69. So most of that short squeeze has probably already happened. It was good. I mean, hey, if you got in here at 99 and you're up at 112, it's a nice 12% run in a week. But this is the kind of thing you want to do when you're checking these charts. You want to see how much fuel for an explosive move there is, right? Anything that has that continually downward trend, we already went through that with ThreadUp, right? So it's that same story. And then once you get down here, now we're talking about penny stocks. So this is a Chinese company, and that's got a nice upward trend. As far as the trend and the pattern, I'd be really interested in that. As far as the short squeeze, 23% and short ratio of 4, and it's a Chinese company. So you just don't have any idea of whether or not you can make use of that data. This company is only a $2 company, but I love its numbers as far as the short business is concerned, right? And it is a medical devices company. So let's have this look. If you're interested in trading a penny stock, earnings are, I don't know why this is showing up on my screen as having earnings the next 5 days. Oh, this is not the same company. That's why. Let me make sure I get it. There it is, Invacare. All right, here it is. Earnings are coming out tomorrow. And as you can see from the look of this move, the short squeeze has not happened yet. So most of the short could go in here, some of it could go in here, and now the stock's sort of basic. And so last earnings, we were the company lost 12 cents a share. It was better than expected, but they still lost that much. They made 220 million. Estimates now are that they're actually going to make money. Look at that. They're expected that they're going to go from losing 12 cents a share to making at least 1 penny a share. And meanwhile, the sales are going to go up a little bit. That's what analysts are expecting. That's really, I mean, this was a $4 company, $4 or $5 company when it was losing money. And now it's a $2 company, and analysts are expecting that they're going to come out and say, yeah, we made money this past quarter. Stock has dropped by 50% in the past quarter. If they were to report that they made any money at all, this stock would jump. Not to mention the short squeeze, all the short sellers piling out. So if you're a penny stock trader, this is a really interesting one, because if in fact they turn to making money, I mean, huge upside here, right? You could eventually, within the year, if they kind of right their ship and get their business going, they could be back up in the $5, $6, $7 a share range. So, so that if you are okay trading penny stocks, that would be an okay one to look at. All right. And with that, everyone, I'll say until we get together next week, take care and trade well.